New Century Resources recently acquired the Century Zinc Mine in northern Queensland. And whilst mining of the primary deposit has been exhausted, there remains nearly 2 million tonnes of zinc at a grade of nearly 3% within the tailings, which New Century plans to reprocess using the existing infrastructure that we believe will see production recommence by next year. And after completing a detailed assessment of the company, we have valued New Century Resources at $1.20 per share. A PDF version of our valuation and financial forecasts is available at the Sophisticated Investor website. For much of the past decade, numerous experts have been bullish on the future zinc price due to a shortage in supply. And with numerous operations now closed, no new major projects due to come online, and stockpiles at decade-long lows, which has already seen an increase in the zinc price, it appears this time is now upon us. New Century Resources is poised to take advantage of this higher price environment through their recent acquisition of the Century Zinc Mine. Being the world's third largest zinc operation for nearly 2 decades, the Century Mine is blessed with world-class infrastructure, which not only includes typical mining-related assets, but also a 7 million tonne per annum processing facility, a 304-kilometre slurry pipeline to the company's Karumba port facility, a transshipping vessel, as well as a 35,000 head cattle station. In addition to these assets, MMG will continue to assist New Century Resources with funding towards future rehabilitation of the project, care and maintenance activities, as well as ongoing community and stakeholder obligations. The previous operators at the Century Mine were driven to maximise revenues and production through the project's throughput levels. This strategy, whilst highly successful, did come at the detriment for metallurgical recoveries as they were lower than the achievable rate. This, however, presented the current opportunity as there remains a substantial amount of zinc at a relatively good grade within the tailings. New Century's strategy is relatively straightforward, as they plan to refloat the tailings to give it the additional time required to maximise recoveries. Minor modifications are required to the front end of the processing facility, however the back end will remain unchanged. Numerous independent studies have already been completed on the reprocessing of tailings at the Century Mine, with recoveries of at least 50%. We have estimated production of at least 100,000 tonnes of contained zinc metal per annum, which will commence next year. We note our estimates are highly conservative, as capital costs will potentially decrease further, whilst operating costs are also likely to fall as further studies are completed on the project. In addition to the tailings project, there is significant exploration potential for further discoveries at Century. Significant historical exploration work has been completed at Century, however the focus was on the discovery of only major zinc deposits. And whilst unsuccessful by this high standard, 2 hard rock deposits have already been defined, 40 lodes identified, and a significant exploration database, which is currently being reviewed, was created. It is probable, in our opinion, that as additional resources are defined, hard rock mining could resume. So with significant upside, world-class infrastructure, and a project that is essentially ready to recommence production, it begs the question, how did New Century acquire the project at such favourable terms? Whilst we cannot be 100% certain, we believe the previous operator, MMG, a major diversified miner, was attracted to the New Century proposal given the management team's experience and the strategy to rehabilitate the Century site. Whilst the terms of the transaction will also see the environmental rehabilitation bond, which is currently guaranteed by MMG, will progressively be replaced by New Century over time from profits of the operation. As the majority of this bond relate to the tailings area, which will be rehabilitated through the reprocessing strategy. The size of this bond will also diminish as the disturbance area shrinks. For full details on our report, which includes our valuation, investment and risk analysis, a virtual site trip to the Century project in Corumba Port, a review of the exploration potential, as well as a range of management interviews, please visit thesophisticatedinvestor.com.au.